Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Monday, July 17th, 2023. So these bulls just don't want to give up, man. And it's like that all-you-can-eat buffet that I've been saying. They're not going to leave until they are fully stuffed, can't eat anymore, or throwing up, and then everybody tries to run for the exit at the same time. I'm still trying to scratch my head on why everybody is so bullish on things right now, and it just really it say we don't go into a recession, which yeah, I'm not sure. I think we are, but if not, we have GDP growth that's going at less than 2% or 2%. And when you have companies, it was fine when you had Obama doing that, and through those years, I don't think he got over 2%, but yet we saw the stock market run extremely high then. But that was because the Fed was on did I think 4 rounds of QE, was just pumping unlimited amounts of money into the system. And right now, something's going to have to break. Either our economy is going to have to do a complete U-turn and we're back up to 4 or 5% GDP. Companies' earnings are going to go through the roof, and we're going to be able to keep interest rates at 6%. I just don't see it happening like that. Something is going to break. The bulls do not have the Feds on their side right now, meaning that the Fed does not want the market up here because it's not going to be helping out their inflation battle that they have. And yeah, even though it's come down a lot, it's come down from levels that they put it to at 9%. It was not seen in decades. So the fact that they're getting it back down, not even to normal, but above normal, and they're cheering that things are working, but it's we're going 4 years without really seeing any kind of increase in our paychecks when you work in the inflation numbers. But in any case, I do believe this is coming to some type of end. I just people are going to start having to take a step back and looking at where we are as far as valuations with everything, and where we are in the market. Like I said, we had the S&P, all the indexes were up pretty good today, but we had the VIX that was up like 3%. So some people are starting to get a little uneasy up here. Like I said, it's going to be something that once it goes, I don't know what the catalyst is going to be, but we're going to be going down a lot faster. And I really do believe we're going to be testing these support levels anywhere between the 4150 down to the 4050. I think this is more likely right here, possibly even here closing these gaps. But really, the big thing is really how they're getting here at these levels, which is blowing my mind because it's just gap up after gap up. So in any case, we know right here, this is the first line in the sand, right? The bears got to get it through to 4,500. 44.76 is the 50-day moving average. And really, the price support comes down at the 44.42 level. If that gives way, then we're coming down to the 38, 43.86, and then again down to the 43.26. So the bulls do have a lot of support levels here that the bears are going to have to work off. And it's just like the bears had, the number of resistance levels that the bulls just took out. And a lot of people don't understand it. I don't either. I don't think anything's really changed in the overall dynamics of the market and our economy. But we saw the bulls blow through these resistance levels, and we're now hitting up at these upper ones. So we're here. You see the bearish divergences on the daily chart. This is the resistance area. If it breaks above, then I'm at 40, 45.83. Maybe like I said, I'm a little baffled on this, but in any case, that would be, if it could break through this and accept it, then we're looking at somewhere around that 43.86, which is, not too far. I'm at 45.86, which is not too far from the all-time highs. And as I said, just the economy, the businesses and stuff like that, we're nowhere near where we were back when we had our economy running with on all cylinders, meaning when we had the really good job numbers, we had really good GDP growth. We're not getting that right now, and like I said, I meant the fact that we're less than 5% away from the all-time highs. I'm scratching my head on it, but something's going to have to give soon because we're just you're not going to have this market just running up if unless the Fed is going to come in with some type of QE, which is it's not going to happen. Here you can see 43.20 50-day moving average. I believe we're coming down to the 200. This just makes more sense. So these are really my two downside targets. But as I said, the Bears they need to get it through these support levels before we can even start looking down at these levels. So let's see what plays out tomorrow. We have bearish divergences on all the charts again. You don't really see it that much, but here we are. So let's see if these signals start kicking in tomorrow. And with that, have a great night, and I'll talk to you guys in the